I'm Steve Ehrlich, Executive Editor here at Unchained. I'm here with Lance Vitanza, Managing Director of Equity Research at TD Cowen, and an active follower of strategy. And we wanted to talk with you this morning to sort of digest this blockbuster earnings report that strategy just released. So, Lance, welcome.
Thank you for having me, Steve.
So let's just start there. What were some of the big highlights that you saw in their Q2 earnings?
Well, for me, the biggest highlight is that the company has increased its full year Bitcoin yield guidance from 25 to 30%. The 30%, which is their new target, still appears conservative to me, but it represents a doubling of the introductory guidance that the company first established earlier in the year. So I think that anytime a company meets its raised guidance for the full year within 7 months of the year, which is what Strategy announced yesterday, and then increases their guidance to be a double of where they started the year, I think that has to be considered pretty strong performance. I can't think of too many companies that I've covered that have ever been able to pull that off.
So what would you say were the main drivers behind their ability to do this? I mean, strategy is known
Absolutely.
for, yeah. I mean, they're known for being aggressive in their targets anyway, and they blew them out of the water halfway through the year.
Well, certainly the regulatory backdrop has been very conducive for Strategy and for other public Bitcoin treasury companies, or PBTCs, as I like to call them. We've had a number of favorable developments, including the FASB rules change, including just yesterday you saw in the crypto report coming out from the White House that there would be basically an emphasis made uh, to preserve favorable tax treatment for unrealized digital and crypto gains. So there really couldn't have been a better backdrop, and you've seen that in the price action of Bitcoin. Bitcoin has had a very good run over the past 12 months. I mean, it's been volatile, but it's had nice favorable trajectory that has helped. But then, of course, give credit where it's due. I wouldn't say that Strategy has just been aggressive. I would say they've been very creative in terms of how they've approached the capital markets. They've gone after it in a very systematic approach. They've targeted specific pockets of the capital markets. For example, first, the convertible bond market. They were very successful in raising, and now they have about $8.5 billion worth of convertible notes outstanding. Many of those, 2 billion of those, came earlier this year. Then they went after the convertible preferred market with their strike issuance. That was successful. They then went to the high grade, highest quality corner of the preferred stock market with their Strife offering. And then most recently, they came out with a new instrument that's designed to appeal to more of a retail oriented investor. And so I think that the creative approach, their ability to very efficiently issue capital and then funnel that capital into Bitcoin, has been the big driver in terms of how they've been able to put up these great yields and these great gains for their common shareholders.
Okay, so let's talk about that. And you mentioned the new FASB guidelines, which I think was spearheaded by Michael Saylor himself in order to let them mark their holdings to market, as opposed to just having to record losses during downturns. $10 billion in profit is massive, but I know there are some questions about how much of that sort of like outsized performance might just be because they recently started using these new guidelines. Could you maybe put their performance in historical perspective if they had the ability to go back to August 2020 and mark their holdings to market way back then?
Sure. What we would see if we've gone back and done that, and we'd see that the progress is definitely going up and to the right. There is no question that restating 24 in particular would have shown pretty dramatic gains, but not as big as the gains that we've seen so far in 2025. So through yesterday, the company had reported over $13 billion of Bitcoin dollar gains. Now that just represents the value of the incremental Bitcoin that they have created without issuing any additional common shares. It ignores the additional value from the fact that Bitcoin has increased dramatically over the period. If you compare that $13 billion year-to-date number in 2024, which was a big year for the company, but the total was $12 billion for the full year. So again, they've exceeded the full year 24 number in just the first 7 months of this year. And we think, and their new guidance, of course, is 20 billion. So they're sort of saying, hey, we think we're going to double what we almost double what we did last year. So I think that it is true that that while the growth looks astronomical when you compare it to non-FASB, altered numbers, even if you were to go back and recast those numbers, you'd still see very strong growth here.
So let's talk about some of their plans for the capital stack, because I know a big part of the earnings related to some announcements there. For one, it does seem like they're looking to move past convertible debt. I know that they have a relatively clean balance sheet in terms of debt vis-a-vis book equity and just unencumbered Bitcoin holdings, but it appears they're trying to retire that. So maybe we start there. What did you hear, and what do you think that means for their capital market strategy moving forward?
I think it's a good thing. It demonstrates the favorable evolution in their ability to access the capital markets. I think the convertible bond market, given that it is rife with hedge funds and arbitrageurs who are seeking, basically they're taking long exposure on MicroStrategy by buying the convert, but then they're on a heavy delta, and then they're shorting stock to basically reduce their net exposure something like 25%. So they're selling a lot of stock for every bond that they buy, and they're just a little bit long MicroStrategy. That was the best avenue for the company, years ago. But as MicroStrategy has grown, they've been able to access the preferred stock market, where you just see much better terms, much better accretion, much better torque, much better efficiency in terms of pricing. So there are just a lot of reasons why, as the company has grown, it no longer has to be dependent on the convertible bond market. Now, the interesting lesson here, I think, is that I see this trail that strategy has blazed. I see this applying to many of the upstart PBTCs, the 21s, the ProCaps of the world, others, where I think that it'll be common for many of these companies to begin their journeys as PBTCs in the convertible bond market. And hopefully, some of them will grow large enough and be successful enough that they will then ultimately gain access to the preferred equity market. And then you'll see them sort of follow that same path, where they maybe come to, if they're fortunate, they'll come to rely less on convertible debt and more on some of these other credit-oriented instruments.
Yeah, that was going to be my next question, because and I know that you can only publicly talk about companies that you actively cover, but when we look at all these other crypto treasury companies, and not just the ones focused on Bitcoin, but looking at Ether and Solana, and further out on the altcoin landscape, I mean, we see pipe deals, we see a lot of converts, like we see SPACs. I mean, and it looks like it's really just a huge race to. It's such a momentum game, and strategy is sort of in its own world still at that point, that like these other companies are doing everything that they can to just get as much size as quickly as possible, so they can continue to raise accretively. Maybe just talk a little more about the converts, because those make up meaningful parts of those cap stacks. What are, you said it's the right time for them to be doing this. What are some of the markers that might suggest that they can move into the preferred equity market, as you mentioned, or just in a general sense, what are some of the risks that investors who might be either buying this debt or buying equity in these companies should know, if they also have a large amount of debt?
Well, it's a good question, and I'm not sure I can give you a great answer. I would just say they need to be a lot larger than they are today. If you think about how big strategy was in terms of its market cap, in terms of its Bitcoin holdings, it'd been doing this for 4 years. It started in fall of 2020, and it wasn't until early this year in January that strategy issued its very first preferred equity instrument. So, and that was at a time, obviously, where the stock had already done very, very well. It was already a very big company. So, um, I think that, look, the good news, I think, is that convertible debt financing, it can be very accretive, and MicroStrategy has shown that. So, having to start out or starting one's PBTC journey in the convertible bond market can be very lucrative, can be very accretive for common shareholders if it's done correctly. Time will tell as to how well these new companies execute. I want to just add here, though, that from the standpoint of strategy, which is the company, no, none of these companies. Look, this is not a winner take all situation. There is room for many, many PBTCs, in my opinion. I agree with Michael Saylor, who has been very actively courting other companies and doing everything he can to assist them to become PBTCs. And he's doing it for all the right reasons. It will ultimately increasing PBTCs. They're not all competing for a fixed pool of capital. The more PBTCs form, the greater will be the pool of capital that the PBTC sector will attract, at least in my opinion. And I think that the more integrated you will see Bitcoin into the broader global financial system. So all of those are conditions which will be beneficial to strategy. So I think strategy is helped, not hindered, by additional PBTCs going forward.
Something else that was mentioned during the report I wanted to ask you about is, I guess, this new promise not to issue more common shares unless the mNAV remains over one. And I guess that's to ensure that they're continuing to raise accretively and not to unnecessarily dilute shareholders. Uh, this is a big this I think is something that will be reassuring to investors, and maybe something that, but I also wonder like how replicable that may be across the entire ecosystem, because like there are companies, I know some were traded below its premium for a little while this year. It might be over now, and there could be other companies in the future that trade below, and then they may have to they may try to raise more money with the promise of bigger returns in moving forward. So just what are your thoughts on this sort of pledge that the company made? And yeah.
Sure. I think that I can't really speak to what other companies may or may not do, but from the standpoint of strategy, I don't think the commitment to not issue when mNAV is less than one is terribly novel or unexpected. Or I mean, they've never done that, and we certainly wouldn't have expected them to do that. What we do find interesting, though, is their pledge that unless mNAV is 2.5 or higher, so unless they're trading, in my terms, I prefer to talk about a premium, unless they're trading at 150% premium to NAV, they're not going to issue equity except to pay dividends, interests, and perhaps some other kind of general corporate expenses. But they won't be they won't be issuing. So in other words, they could be trading at a mNAV of 2, and they won't issue common stock to go out and buy more Bitcoin. That to me is different. Clearly, that represents a change because the company has very recently issued meaningful amounts of common shares at mNAVs well below 2.5. I think less than 2, if I'm not mistaken, probably as low as 1.8, 1.9, certainly. And so that is a change. And to your point, though, I agree with you. I think it will be very reassuring to common shareholders going forward. At the same point, I guess the question is, does that put pressure? How much pressure does that put on the company's engine if they are only going to be issuing common stock? When the mNAV is above 2.5, and today the mNAV is 1.8, something like that.
Been two and a
You
half, I
know,
think, late last year.
then they're going to need to lean pretty heavily on, and they don't want to do any more convertible notes, right? So they're going to need to lean pretty heavily on on the new preferred issuance, which up until today's date have been, I mean, what they've done in the primary markets has been, what they've done in their IPOs, I should say, has been spectacular. But what they've done on their ATMs has been, I don't want to say underwhelming, but certainly it hasn't been to the same degree of enthusiasm that we've seen. We think that could change with the new STRC variable rate preferred. If you look at the volume of trading in the secondary market over the first week or so of that issue is being listed on the NASDAQ, the volume has been very, very strong. And that suggests that we might see much greater issuance of that new preferred under its ATM facility. And as you know, that ATM facility was just implemented yesterday. At the same time the company announced their earnings, they announced that they'd established the new STRC variable preferred ATM.
Yeah, and I remember the first issuance said it was upsized from 500 to 2.5 billion because of that exceptional end for it. So, and just to be clear as well, I mean, these are just pledges, like theoretically, and there's no reason to suspect that they'll go back on it, but like they could change their mind if they needed to. There's nothing that would stop them from that, except because like impacting market. But
You're
I know
exactly right. That's right.
many Michael Saylor followers have a lot of faith in him because of how dogmatic and orthodox he's been about his diamond hand strategy since they started this back in August. One other quick thing, and then we're going to start wrapping up. They also started discussing more the Bitcoin per share metric and sort of discussing how that can be used in conjunction with the Bitcoin yield metric that Saylor introduced about a year and a half ago. Could you maybe just quickly walk us through the difference between those two, and why the second metric?
Well, they're two sides of the same coin. You can't calculate a Bitcoin yield without referencing Bitcoin per share, right? So, for example, if you see in our published research where we report the company's progress on Bitcoin yield, you can see quite clearly the Bitcoin per share stats that are underlying those data, right? So, I don't think we should make too much of this because they were always relying on Bitcoin per share. Why they decided to show it in this particular instance, that's a fair question. I don't really know the answer, but I do think it is compelling. I mean, I like to think about it in terms of, hey, if you go back to the beginning of 2023, which wasn't that long ago, about 19 months ago, right? Since that time, the company's increase in Bitcoin per share is 130%. So think about that for a second. You own more than twice as many Bitcoins per share today than you did 130% more than you did, just 19 months ago. That's pretty impressive. I like to think about it the same way when I think about the Bitcoin yield for 2025. If we pull forward to 2025, they've reported a Bitcoin yield of 25%. Well, what does that mean? That means that we own 25% more Bitcoin per share today than we did before. Do I care what the Bitcoin per share number is? Not necessarily, right? I really care more about how quickly Bitcoin per share is growing. So for me, I believe that yield will always be more relevant than the underlying Bitcoin per share. But you can't have one without the other.
Yeah, fair enough. Um, just one or two more quick ones. I know this was something that you wanted to ask him yesterday, and it's a question that's on a lot of people's minds. Right now, Strategy owns, I guess, a little less than 5% of all the Bitcoin that's ever been minted, and I wanted to get a sense of, I wanted to get a sense of, like, what the end game is, and how healthy it is for companies like this to really market or sort of corner the industry when it could be argued it's still kind of in its infancy.
So just to clarify, right now with about 630,000 roughly Bitcoins, they own about 3% of the total of Bitcoin that will ever be mined. And that includes the, roughly 5% of the Bitcoin that are presumed to have been lost. We're just taking, the 630K over 21 million, it's about 3%. If we think about that in the context of, what this company can do, I personally, and you're right, I did ask the question yesterday, and I thought the answer was helpful. The fact of the matter is the company has a long way to go. There will come a point necessarily someday when they own about as much Bitcoin as they can own before owning more Bitcoin starts to be counterproductive to the establishment, the further development of Bitcoin throughout the financial systems. But what is that 30%, 20%? Now, I'm not suggesting the strategy is ever going to own anything like that. My point is that if in theory, they could, and it would not necessarily impede the progress of establishing Bitcoin throughout the financial systems. The reality is, I suspect, and this is just my suspicion, I suspect the strategy has another 10 years to really go at it aggressively and acquire as much Bitcoin as they can. Our model, our published model, we published this morning, shows them owning about 4.3% of all Bitcoin ever to be mined by the end of 2027. So that's up 130 basis points in almost 2.5 years. So if you sort of think about that, given that it gets harder to increase the law of larger numbers, right? So it's presumably they're not going to be able to increase, it's, if you run that out, do you get to 10% in 2035? Maybe, somewhere. I don't have the projection out that far, so I want to be a little bit cautious there, but you see what I'm saying in terms of the progression over the next couple of years and the rate of increase.
Okay. And just last question. I know we started off the conversation talking about how they've increased some of their targets this year because of their success in implementing their accumulation strategy over the first 6 months. I know in the report that you published this morning, you've also made some adjustments as well. So what are your targets through the end of the year based on what you saw yesterday?
So we're now targeting a 32.1% Bitcoin yield. So that compares to 2.1% more than the company's sort of minimum or target at this point. And I guess what we're saying is that we think that the company is likely to increase the target or exceed the target by the end of the year. Personally, I would not be at all surprised if they're pretty darn close to 32% by the end of the third quarter, or at least the 30%. So I suspect that when they report the third quarter, they'll increase their full year guide yet again. And to be honest, I suspect the risk to my number at 32.1%, I think that there's arguably more risk to the upside than to the downside there. So what that means is that the company is going to, I think, by their reported metrics, they'll have no problem meeting their $20 billion, Bitcoin gain target, which again is up from 15 billion 2 days ago, and it's up from 10 billion when they first introduced guidance for Bitcoin dollar gain for 2025. So, where that comes in, time will tell. We calculate Bitcoin dollar gain a little differently. We look at the actual price paid for the Bitcoin rather than the ending period price. So our calculation is necessarily less. It doesn't compare apples to apples with theirs. For what it's worth, we're forecasting the company to generate $15.3 billion of Bitcoin dollar gain this year. And actually we have 16 billion-ish in each of the next 2 years. So, depending on how you calculate it, you can get to, anywhere from 16 to 22 billion, depending on what sort of how you go about making the calculation. We take a more conservative tack, which we think is appropriate. But again, there's no there isn't necessarily one answer here.
Okay, great. Well, thanks for your time this morning. Thanks for coming on Bits and Bips, and we look forward to having you back.
My pleasure. Thanks so much.